The BEVA Conference 2025 brought together the insurance sector's top executives, and Insurance Business UK was on site to ask the industry's biggest questions. In this edition, we ask, which regulatory actions have you been disappointed or pleased with over the last 12 months?
Well, I think regulatory-wise, the feeling I'm getting from the insurance market is that they're feeling over-regulated. They're feeling that the regulation is too onerous, almost anti-competitive. I think protection of customers is paramount and making sure that everything's done properly, but it shouldn't be to the extent that you can't trade or you can't do the job. So I think there's that. I think we have a new government, and I'm wondering, they're going to do a Civil Liability Act review. I'm wondering if they'll look at the portal, the OICP portal, and fix it up a bit, because I think it could run better than it does. So I think it's a tough job to be a regulator, but I think maybe engaging with the industry and listening to us, and that kind of collaboration where we can kind of explain how we want to do things properly, but we want to be able to do the job and to be able to, just to run businesses. So yeah.
I think in terms of pleased with, obviously the consumer duty changes, maybe a little bit more than 12 months, but we've certainly seen a lot of interaction over the last 12 months around engagement with insurers around it. I think as that we've kind of navigated this new legislation, both with the regulator and the insurer, I think we're all quite clear on what that means now. We've had some really great conversations, and ultimately it's going to end up better for the customer. I think disappointed. I think there's been perhaps it's been a bit slow from the regulator around some of the new technologies emerging in AI and regulation in that respect. I think there could be a bit more to sort of make it a bit more consistent in terms of approach and application, but we'll wait and see what happens over the next 12 months.
We're very pleased with the FCA's launch of their consultation on the approach to commercial insurance. This has been a really big piece of work that we've been working with them for a number of years now. So this has been the fruition of all that work. Obviously the devil's in the detail of that. So we're going to be working really hard with our members to make sure that actually it does deliver for them what they've been asking for. And that does mean that we'll be working quite hard on that. We do think there's more that can be done, particularly from the FCA and PRA on general reporting requirements. And so that is going to be our next focus after this.
I think the last 12 months has been a relatively progressive one for the Financial Conduct Authority, who regulate our members. There was the little bit of a misunderstanding, shall we say, over their proposals around the naming and shaming of firms under enforcement investigation. But to their credit, they took feedback from the industry and they have significantly pared down those proposals to something everyone's quite comfortable with. And we've seen them develop more proposals around simplifying the conduct rules, particularly for our members, by developing a proper demarcation between consumer business and the sorts of complex commercial business that LIBA members deal with, and hopefully introducing a more proportionate supervisory regime for our members off the back of that. So a good year. I think there's some way still to go, but we're happy, and our relationship with the FCA is as good as it ever has been in my time in this job.
So over the last 12 months, the most challenging regulatory issue has been the pausing of the sale of gap insurance, something that we didn't agree with. But there's been some real positive actions with the FCA. BEVA's been working really closely with the FCA, and that's culminated in the new consultation paper of CP 2512, simplifying the insurance rules. So what we're going to get there is a reduction in the scope of the consumer duty to something far more proportionate. We're going to have a review of the fair value assessment system, and we're going to clear out some of the old ICOBs that we don't need anymore. So we're actually working really constructively with the FCA at the moment.
The plans that we've seen over the past 5 years are at a much higher level than what we were previously seeing. However, what we do welcome, and I think our head of compliance would agree, is that the FCA have recognised that there is a big regulatory burden, and they're kind of scaling back on some of the duplication that we've had to be dealing with. Because for a small MGA, it's a huge burden on them when they're a small team and they're having to deal with that.
Disappointment is probably not the correct description of it.
But we look at the Building Safety Act, which is legislation, not regulation, but that'll bring a huge burden onto the claims supply chain, loss adjusters, contractors, the imposed burden of that additional legislation, rightfully arising out of the Grenfell tragedy. The duty holders, the accountable person, the golden thread of buildings, understanding all of that and understanding how that impacts claims. It's more of a concern because I think that we haven't as yet grasped the magnitude of the impact of that legislation, and it's something that we're really going to have to grab and move forward proactively on.
We are a global leader here in the London market, and we have to remember that. Now, I think that's why now is the time to really talk about the UK captive regime. So I'm really pleased it's actually got to consultation stage, and there's been a number of really important leading market voices like Caroline Wagstaff of the LMG and Graham Trudgell of BIBA, who've spoken out in support of this. I think now is the time to talk about it. I think lots of positive work has been done, and I look forward to hearing more.
So I think, if this is a question you've asked a few people, then I'd say probably consumer duty has probably been one of the biggest challenges, particularly for those of us like Akias who are in the commercial space. So some of our business is captured by consumer duty, even though we're insuring commercial customers, and some of those commercial customers might be in Australia, but because it's being written from the UK, also get captured by consumer duty. I feel like I respect the reason why it's there and why fair value and the consumer duty rules have come in to protect consumers, and it's definitely a worthwhile piece of regulation. However, I think the FCA have to think about going forward how they introduce new regulation and what are the problems they are actually looking to solve. So it actually becomes more not necessarily easier to implement, but it's more engaging with more engaged with the insurers. And I know there's lots of consultations around it, but that process doesn't really seem to be working. So we get hit with regulation, and now the FCA are looking at how co-manufacturers and how that's now structured, and they're looking to change it. Yes, they're going to be looking to change it to make it less onerous or remove some of the duplication, particularly around fair value assessments, like who does it? Is it the insurer? Is it the MGA? Is it both? But perhaps maybe some of this could have been figured out before the regulation came in. We're a year, 2 years in, and consumer duty champions. Everyone had to nominate and put a consumer duty champion on the board. And now the FCA have said, oh no, you don't have to have one of those. So all of the work that goes into from the insurance industry to comply with the regulation, and then after a very short succession, like a very short period of time, realising that actually it's not delivering what the FCA expected, and therefore they now need to make a change. I think they need to have a bit of a retrospective around why we've ended up where we've ended up, and then apply that to any kind of changes in regulation going forward.
I think the FCA's had a good year, actually, and I think there's two things. I think the introduction of the competition requirement that the government brought in after the election, or was it? I think it may have been just before the election, but the new requirement that the FCA have to actually think about the competitiveness of the market, I think is starting to drive good behaviour. And I would say, I don't know if it's a manifestation of that, but it was certainly an encouraging development was that they made an intervention in the motor finance case at the Supreme Court, which I think is to their real credit, because what they were doing there, they were thinking about the structure of the market rather than thinking in a very black and white way about a theoretical negative outcome for customers, and actually thinking about market structure and how that, if a well-functioning market can actually be really useful to customers. And basically, if the motor finance issue becomes something that stops clients getting premium finance, then the clients will be materially worse off, and they'll have to find cash flow for their insurance premiums in much lumpier way. So I think it's to their credit that they intervened positively in that regard.
Pleased is a strong word, but the fact that IPT has remained level for a few years has been positive. Obviously, in an ideal world, it'd be reduced. One of the biggest disappointing areas, I would say, is the consumer duty changes. They were brought in to reduce, to increase customer outcomes and make them more positive, but I think due to the administrative burden that this put on brokers, and they have to spend a lot of time demystifying the regulations, it ended up not improving customer outcomes in the way it was intended to.
The regulatory action that's been interesting for me was the intervention of the FSA in GAP. I think it was a necessary intervention, and it was, but it was a little bit over the top. So I was a bit frustrated that for me, I thought they could have targeted the problem areas a little bit more directly. And because they didn't do that, they basically turned off all of GAP and the underwriting for GAP. It meant that customers and people that needed the product were deprived of it for quite a considerable period. The good news is it has solved the situation. The premiums are now going to be at a much more affordable level for everybody without the profiteering element that was allowed previously to carry on for quite a long time. So I think us at Alps are relaunching the product any day now. So it's good news for the consumer, finally.